Welcome, accounting boffins. You with Ashraf Patel and the crew. And remember, guys, we're doing our favorite section. That's right, asset disposal and how it ties in with note number 3. So think about it. What processes do we have in place when it comes to an asset disposal? You remember we said that there are certain accounting entries that we have to process when it comes to a disposal of an asset. Right. However, that table we've discussed at length, but you will see just now how we go through the table once again. So important would be our accounting processes that we have to put through in order to effect an asset disposal. Okay, if we do a quick recap of the section in terms of what is expected of you to know. Remember we said when it comes to your depreciation, our two methods of depreciation, the cost price method and obviously the diminishing balance method. Okay, so those are your calculations that you have to take into consideration when you're going to be dealing with an asset disposal. Once again, asset disposal, we said, what type of an account is it? It's an interim nominal account. In other words, what happens to it? It serves a particular purpose, and once that objective is reached, it self-destructs. You will see that also when we do an actual asset disposal account. Right, moving on to our information now. The following information appeared in the books of Alpha Traders for the financial year ended 31st of December 2020. So you already set your frame that this is my financial year. Okay, now, what are we expected to do? Prepare the asset disposal account in the general ledger, taking into account the donation of the vehicle. Right, now, we also have to complete the fixed asset note to the balance sheet. We also have to show individual depreciation amounts in order for you to get part marks. And this is important. When you are doing the fixed asset note, show your calculations, because perchance, if you make an error with one calculation, you could get a part mark on the next calculation. And then explain how the fixed assets register will assist the internal auditor with her duties. Provide 2 points. So now you clearly have a picture of what is required of you. Okay, now let's start with the question. What do we have here? We have land and buildings, vehicles, equipment, accumulated depreciation on vehicles and accumulated depreciation on equipment. So that's the information that we have. Okay, obviously we're going to be using this information to do what is required of us. We are told that a new storeroom and extensions to the office block were completed during the financial year. On the 1st of July 2020, 2 new computers were purchased on credit from Princeton stores. No equipment was sold during this financial year. So important, guys, is for you to absorb the information and understand it, because this information is going to impact on all our calculations. On the 1st of October 2020, an old vehicle, hint, hint, cost price of 70,000 Rand was donated to the local children's home. The accumulated depreciation on this vehicle was 66,000 Rand on the 1st of January 2020. That means the beginning of your financial year. Vehicles are depreciated at 20% per annum on cost, and equipment is depreciated at 15% on the carrying value. Clearly you can see the two different methods of depreciation. Vehicles, 20% on cost. Equipment, vehicles was 20% on cost, that's right. And equipment is depreciated at 15% on the carrying value. Okay, we alluded to this earlier on in our lesson. Now, let's take a look at the depreciation calculation for the vehicle that we are disposing of, right? We know that the cost price is 70,000, so immediately we take our cost price times our rate times the time. Do you remember art? I'm sure you do. What do we mean by art? We work with the amount, the rate, and the time. right? So art is what we use when we're doing our calculation. Now, we've got the 70,000 Rand as our cost price of the vehicle that we are donating, right? The rate of depreciation is 20%. It's on cost. So obviously 20% of 70,000 times 9 divided by 12. Let's do this calculation and see what we have here. So obviously it is your 70,000 times the 20%, okay? And that will give me that figure times 9 divided by 12. And clearly you can see you get a figure of 10,500. Okay, there's my 10,500. Now, what is important for you to remember is that if I put through an entry with the amount of 10,500, what's going to happen? Watch this here. If my accumulated is 66,000 Rand, obviously from my information, there we go, we said that the accumulated depreciation was 66,000. So therefore, if I take 66,000 and I add 10,500 to it, let's do that, plus the 66,000, notice you're going to get a figure of 76,500. Now, obviously, this is not possible. Why not? Because your accumulated depreciation will now be more than your cost price. And then you will have your carrying value as a negative. And we've done this before, so clearly, when you are faced with a situation like this here, immediately you discard the 10,500. Meaning, ignore it. Don't use it any longer. Right, so now what do? This is what we're going to do. We say, fine. The maximum depreciation that we can write off would now be, obviously, if you take your 66,000 as your starting point, where we have it in our accumulated depreciation, there we go. You can see that the maximum depreciation that you can write off is 3,999 Rand. Why? Because you want to be left with a carrying value of 1 Rand. Okay? Remember I said in the question, they told us here that we disposed of an old vehicle, and I said, hint, hint, indicating to you, be careful. When something like this appears in an exam, you are given information. It's leading you on to think, okay, I must be careful when I do this calculation because it could be that I need to work with the 1 Rand carrying value. Okay, so now, back to our table. Remember we said whenever we're doing an asset disposal, we drop a table with all the relevant information. Right, so we start off with the depreciation, and there we go. We've got our depreciation now, knowing that we could not use the initial figure that we calculated. The maximum we can write off is 3,999 Rand. Okay, so that's sorted out. Then we move on to the cost price. The cost price of the vehicle was 70,000 Rand. Remember, when you did your accumulated depreciation, you said, okay, fine, let's start off with the 66,000, which is my opening balance, plus, now this is something that you must always remember to do, is add the pro rata depreciation. That means the depreciation for this financial year, okay? And that was the 3,999 Rand, to give me an accumulated depreciation now of 69,999 Rand. And then I now calculate my carrying value. What do I do with my carrying value? How do I calculate my carrying value? It's my cost price minus the accumulated depreciation. So therefore, take your cost, 70,000, minus your accumulated depreciation will give you a carrying value of 1 Rand. Right, now I'm sure at this stage you know why we work with the 1 Rand as a carrying value. Okay, now, our selling price, obviously, we're donating it to the local children's home. Obviously, you're going to donate it at 1 Rand, and therefore, you will notice that your selling price is equal to your carrying value. Meaning what? When your selling price is equal to your carrying value, that means you have neither made a profit nor a loss. Okay? Always remember the rule. When your selling price is greater than your carrying value, you're making a profit on sale of asset. When your selling price is less than your carrying value, you're making a loss on sale of asset. Okay, therefore, let's look at the asset disposal account now in the general ledger, and we have to take into account the donation. So, firstly, the first entry, let's go back to this entry, depreciation. What's my double entry? My double entry is a debit to depreciation. Why? It is an imputed expense, and a credit to accumulated depreciation. Why? Because it's a negative asset increasing in value. Okay, so there's my entry done and dusted. Debit depreciation, credit accumulated depreciation. Right, with the cost price, what's my entry? A debit to asset disposal and a credit to my vehicles account because I want to remove the asset from my vehicles account. So therefore, you can see here, there's my entry, a debit to my asset disposal, right? I'm debiting my asset disposal account with the cost price, and I'm going to credit my vehicles account, removing the asset from my books, so I don't have that asset anymore. Next entry, accumulated depreciation. Double entry, debit accumulated depreciation. Why? Because you're removing the accumulated portion of that asset in terms of its accumulated depreciation. Like we removed the cost price, we also remove the accumulated depreciation. Therefore, a debit to accumulated depreciation and a credit to my asset disposal. Watch, there's my entry. You can clearly see I'm crediting my asset disposal. Now, what amount do we use? We look at the 66,000, which was my opening balance, plus the 3,999 Rand to give me the total amount of 69,999 Rand. Once again, I want to show you how important this table is to your understanding of your ledger account. Okay, now, next step, we're looking at the selling price. How did we dispose of the asset? We donated the asset. Double entry, debit donations, which is an expense account. Credit the asset disposal. Here we go. We're crediting asset disposal. There's my entry, 1 Rand. Notice now that the debit side adds up to 70,000 Rand, and the credit side also adds up to 70,000 Rand. So clearly you can see now, what have we done? We've taken the asset account, we've removed the vehicle from the asset account, we've moved all the information regarding the vehicle that we are donating into an interim nominal account, which we call asset disposal. Now, if you remember, or you should remember, we said that the asset disposal account, what will happen to it? We said it will close by itself. It will self-destruct. The debit side will be equal to the credit side. And therefore, that account will then serve the purpose that it needs to serve. And you can clearly see in this particular example that we are doing, there is no profit or loss on sale of asset. Reason? Because the selling price was equal to my carrying value. Let's just do this so that we remember for future, if my selling price is greater than my carrying value, then I'm going to have a profit on sale of asset. Okay? And if my selling price is less than my carrying value, then obviously this will result in a loss on sale of asset. So, what's the ultimate aim and objective of the asset disposal account? The ultimate aim of the asset disposal account is to calculate the profit or loss on sale of asset. Right? Now, in this particular case here, you can see that you have a donation, and that donation will also now feature in your statement of comprehensive income under your expenses. You will add to your donations figure. Okay guys, so what we've done in this first segment of our lesson is we've gone through the asset disposal account. You want to know more about note number 3 and how it gets impacted with all our calculations? Then take a quick breather and we'll see you in a jiffy. Welcome back, accounting boffins. Remember, we're doing asset disposal, our favorite section, the section we're going to ace in the exams. That's right. Okay, now we're looking at asset disposal now and the calculations that we have with respect to depreciation and how it's going to impact on note number 3, the fixed asset note. Now, very often you find a challenge with note number 3 because of the fact that there's an asset disposal and you have to do the calculations with regards to depreciation. But guys, don't fear when Ashraf is near, because after today, note number 3 is going to be a piece of cake, chocolate cake. So you know my favorite. Okay, so now, if we look at the fixed asset note with regards to the balance sheet, they also say here, show the individual depreciation amounts in order to earn part marks. Can you see that? Very often that you tend to not show the calculations and you can lose marks in exams. So make sure that you show your calculations. Okay, so now if we look at our land and buildings, let's start off with land and buildings. We are told that land and buildings, we have let's get the information. Here we go. Our opening balance is 1,200,000 and our closing balance is 1,450,000. So immediately what you do there is you say, fine, take your 1,450,000 minus the 1,200,000, okay, and you're going to get a figure of 250,000 Rand. This means, therefore, if you take this into account, watch, your opening balance is 1,200,000. There we go, right? You know your closing balance is 1,450,000. Clearly you can see. Now, obviously, you can only do this with land and buildings by comparing the opening with the closing balance. Why? Because land and buildings is not subjected to depreciation. So there won't be any calculations impacting on my final answer. Therefore, all you do with land and buildings, do a comparison with your opening and your closing balance. So my opening was 1,200,000, my closing is 1,400,000. Clearly you can see it increased by 250,000, indicating to me that there was a movement and there was an addition at cost. Can you see? There's your addition of land and buildings of 250,000 Rand. However, is it possible, just think of this for a moment, is it possible for my closing balance to be less than my opening balance? Possible? Don't know? Of course it is. If your closing balance is less than your opening balance, it means that you sold land and buildings. There may have been a part of your property that was no longer being used, and there may have been a need to sell that property. So that can also happen. So don't take for granted that it's always going to increase. It can also decrease. In that case, it means that we've sold a portion of our land and buildings. Okay, so that's land and buildings done and dusted. So we sorted with that one. Let's go on to the next one. And the next one we're going to be doing is the equipment, I think. That's my calculation. Yes, equipment, right. Okay, if we come to equipment, the first thing that you notice is you have an opening balance of 195,000 and a closing balance of 217,000. Let's put that information in there. So there's my 195,000, which is my opening balance. And then also note, I have here my accumulated depreciation on equipment was 88,000 at the beginning of the year. So therefore, slot that information in. There's my accumulated depreciation at the beginning of the year. Obviously, 195,000 minus the 88,000 will give you a carrying value of 107,000 Rand. So that's my information at the beginning of my financial year. Got that? Okay. Now, what do I know? I know that I bought equipment to the value of 22,000 Rand. So that's the next figure that I slot in, because I'm told in my question that equipment was purchased. Here we go. 2 new computers were purchased on credit from Princeton stores, and no equipment was sold during the year. Therefore, I can go into this and say, right, fine. There's my purchase, there's my additions, I bring it in. There was no disposal, so that's a 0. Okay, now what do? Now I do my calculations on my depreciation. Very, very, very important. Okay, what am I supposed to do? Equipment is depreciated at 15% per annum on the carrying value. So immediately I say, fine, let me get my information here. Okay, here's the information that we need. Equipment is depreciated at 15% per annum on the carrying value. Right, this means therefore, we now do the following calculation. Let's start with our carrying value on equipment of 107,000, right? So that would be obviously the old equipment. So here we go, old, it's 107,000. And why am I using 107,000? Because you can clearly see that depreciation is on the carrying value. Therefore, in my calculation, it's 107,000. That's my amount. I now go to my rate, and the rate we know, we've been told our rate is 15% per annum, so therefore we go 15 over 100, and my time, it was old equipment, means we've used it for the entire year, 12 over 12. Let's do this calculation now. So we got 107,000 times 15%, and that will give me a figure of 16,050. Okay, so now watch my depreciation. Clearly you can see that there's my 16050. Can you see? I've shown you both parts of your depreciation, so you can clearly see that the 16050 comes from my old equipment. Right, now I go on to the next one, which is my new. Okay, and let's do the new in the red. So we say the new equipment is 22,000 Rand. Once again, we were told that we purchased new equipment, so there's my 22,000 Rand. And in my calculation, I know that's my amount. My rate is 15 over 100 times my time. And this is important. When were these new computers purchased? They were purchased on the 1st of July 2020. So in other words, if you now count, it's July, August, September, October, November, December. It's your 6 months, right? Times 6 over 12. So in terms of my calculation, here we go, times 6 over 12. Let's do this calculation now. Immediately we say 22,000 times 15% is equal to that, times 6 divided by 12, and you get a figure of 1650. So watch here. Here we go. There's my 1650. And what is that? That is now my depreciation on my new equipment. Watch what I've done. In my calculation, I've separated old from new. Always keep them separate. You can't combine the two calculations because obviously the time factor changes, and as a result of that, you can't combine. It's impossible to work out the two figures in one calculation. So please, guys, keep those calculations separate and also show the separate amounts in your answer. So therefore, if you now add 16050 plus the 1650, you'll see it will give you the 17,700. Right, carrying on with my equipment. Now watch how I build up this note, right? And watch how I check the note as well. So therefore, I come to my end of the year now, and I say, right, my cost of my equipment changes to what? It was 195,000, so therefore, take my 195,000 plus, there's the 195,000 plus the 22,000, the new equipment that I purchased, to give me a figure of 217,000. There we go. Can you see how your balance changes because you bought more equipment, right? So you add the movement to your opening balance. We also know that no equipment was sold, so clearly it will only be the old plus the new. Right, look at your accumulated depreciation. Very important. What was my entry for depreciation? A debit to depreciation and a credit to accumulated depreciation. Debit your expense, credit your negative asset. Once again, watch. My opening balance is, on accumulated depreciation was 88,000. Therefore, watch what I do here. I say 88,000 plus, let me get the figure there. It was 17,700 plus your 17,700, which was this year's depreciation, to give you a figure of 105,700. Here we go. There's my 105,700. Can you see? You're working with the note in its entirety. That means you're taking your opening balance, adding your depreciation to give you your closing balance. Now, let's do the check to see if our note actually works out. So therefore, you take your closing balance here, right? And we say, fine, my closing balance was 217,000. So let's take the 217,000, which is my end of year balance, minus my accumulated depreciation of 105,700, and this will give me a figure of 111,300. There we go. There's my 111,300. Okay, now let's do the next check and see if that also works out. Let's do this here. So you've got your carrying value at the end of the year, which is 107,000. Clearly you can see it. There we go. Plus your 22,000 minus your 17,700, and voila. What do we get? 111,300, meaning that your note is absolutely perfect. You've worked. What did we do? Watch this here. You worked from the top to get to the 111,300, and you worked with this year as well to get your 111,300. So therefore, you can see that this is how we go about doing the equipment. Right. We move on now to the next one. And we are told that vehicles, we sold the vehicle. Remember, we dealt with that one already, so we are aware of that. And we also know that depreciation at 20% on cost. Okay, so now, if we look at our vehicles, let's look at our vehicles here, guys. Okay, step number one, opening balance, 820,000. From where? From my information. There we go, 820,000. Accumulated depreciation on vehicles, 344,000. Therefore, I bring that in, 344,000, to give me a carrying value of 476. What is it? 820,000 minus 344,000. Okay. Now I know that I had a disposal. Now obviously this one we've dealt with, so we know where that disposal came from, don't we? That's the R1 that we donated that vehicle. Now, if we look at our depreciation, and this is where the other calculation comes in. Now, obviously, you know how we got the 3,999 Rand. So, if you look at your vehicles, and if you take your 820,000, let's do that. Let's take the 820,000 minus the vehicle that we disposed of. Remember, its cost price was, let's get the cost price of that vehicle so we know what it was. The cost price of the vehicle that we disposed of was 70,000. Therefore, in our calculation here, you can see that minus the 70,000, right? And this will then give you a figure of 750,000 times your 20%, okay? And that gives you a figure of 150,000. Voila, there's my 150,000 Rand. And notice, I'm showing the two depreciation amounts separately. Add the two together will give you 153,999. Okay, now we come to the closing balance. Remember, 820,000 minus the cost price of the vehicle that we sold gave me the 750,000. And if you look at your carrying value of your vehicles was the 476,000 opening balance. Add this year's depreciation of 153,999 minus, now this is important, this is very important. What do we subtract? Remember, the accumulated depreciation was 69,999 Rand. So therefore, let's do this calculation and see what we come up with. Okay, here we go. So if we take our carrying value, we're doing the accumulated depreciation. So we said 344,000 was the opening balance plus 153,999. That was this year's depreciation, gave you that, minus the 69,999, which was the one of the vehicle that we disposed of, to give me a figure of 428,000. There you can clearly see your 428,000. Now what do? Take your 750,000, right, minus 428,000, and here we go. 322,000 is the figure we're looking for. There's my carrying value at the end of my financial year. So this is how you go about completing the information with regards to the note number 3. Just before we conclude this section, just one quick appetizer here. Explain how the fixed assets register will assist the internal auditor with her duties. Clearly you can see it is a detailed record of all the assets reflected by the accounts in the general ledger. It shows the individual assets' age and the carrying values. It also assists us in terms of the audit processes to verify internal control procedures. It assists in making decisions as to whether to replace, repair, or dispose of older assets. So clearly you can see that your fixed assets register will have information regarding individual assets. You will be able to see which one is outdated, which one do we have to replace, and the like we've discussed. Okay guys, when you come back, we continue with fixed assets and asset disposal. Let's take a quick break and we'll see you just now. Welcome back, accounting boffins. Yes, quite a hectic session, isn't it, with all those calculations. I think what it requires is a recap on the calculations. One more time. Let's look at this here. Whenever you are dealing with your calculations with regards to asset disposal, remember, when you're doing your depreciation calculations, always separate 1, the old. That means all the equipment or whichever asset you're dealing with, separate the old from the sold and the new. So keep this in mind. Whenever I'm doing a calculation for depreciation, I separate old, I separate sold, and I bring in the new. So this means, let me relate this to the question that we have just completed, right? Here we go. You can clearly see that, where's that question? Here we go, we'll find it here, here we are, right? This is the one that we're looking at. Look at equipment. Remember, in equipment, you only had two components. What did you have? You had your old, which was 16,050, right? That was your old. And your new was 1,650. Clear, guys? So, in terms of the depreciation, you separated your old and your new. You did not have a sold in this particular example because you did not sell any equipment. When it came to vehicles, you also had two components. What did you have? You had your sold at 3,999 Rand and your old at 150,000 Rand. And obviously, you can see in this particular example, you did not have any new vehicle, right? But you may also get a situation where you have to have all three components, namely sold, old, and new. Okay, so this means therefore, when you are working out your depreciation, keep in mind that you're going to work out the old depreciation, and this one here, your time component will be 12 over 12, right? So you're looking at art, amount, rate, and time. The time component for this one will be 12 over 12, right? The sold one will be X over 12. What do I mean by X over 12? Here you will work out the pro rata, meaning the number of months that you've used the asset for in this financial year, right? So, depending on when you're disposing of the asset, it will indicate to you for how many months you've used the asset in this financial year. And then the third one is your new. Obviously, the new is bought in this financial year, and this one will also have the component as X over 12, right? So that is your new. Again, depending on when you purchased the equipment, it will indicate to you how many months you've used that equipment for, and that will give you your calculation. So, when you are doing your calculation, obviously it's your amount, your rate, and your time. This art is very important when you are working with your calculations on depreciation. Okay, then another important factor that we need to take into consideration is when you are doing your asset disposal. The moment you are working out your depreciation on your sold, keep in mind that the accumulated depreciation cannot exceed the cost price. You cannot have a situation where the accumulated depreciation is more than your cost price. Again, our example, remember with what we said? The depreciation, the accumulated was 66,000, right? And when we worked out the calculation, we actually had to work out depreciation, and we worked out that figure to be 10,500, right? But now, that could not happen because that would result in your accumulated depreciation becoming greater than your cost price, and in this case here, the cost price was 70,000. This resulted in us then using a maximum amount of depreciation of 3,999 Rand in order to be left with a carrying value of 1 Rand. Now, why 1 Rand? Because we've said in the past, and we're repeating, that an asset has to have value, and therefore the value, you bring it down to its the least amount that you can show it in your books, and that was the amount of 1 Rand. Another important one that we need to consider here, guys, is when we're doing our asset disposal, once again, keep in mind that if your selling price is greater than your carrying value, you're going to get a profit on sale of asset. If your selling price is less than your carrying value, you're going to get a loss on sale of asset. And if your selling price is equal to your carrying value, you're going to get no profit or loss, as we had in our example where we donated that vehicle at R1, and therefore you can see there was no profit or loss on sale of asset. Okay. The question says here, identify 2 possible reasons for disposing of an asset. Okay? Again, a theory type of question. You are expected to identify reasons why would you dispose of an asset. Because remember what we've said, an asset is purchased with the sole intention of being used in a business. It's not purchased with the intention of reselling. It's not trading stock. It's asset, it's land and buildings, it's equipment, it's vehicles that we are using in a business to generate the highest possible return. So, what would our answers be? 1, it could be that it has reached the end of its useful life, right? Remember that vehicle was an old vehicle. We were still using it, but it was an old vehicle. So it reached the end of its useful life. Or it's outdated. Think of equipment that you have in your business, that you are using in your business. If it becomes outdated, then obviously you need to upgrade. And therefore, the old equipment needs to be disposed of. Then you have an asset that has a high running cost. Once again, let's use the example of the vehicle. Once a vehicle becomes old, clearly it means that the running costs on that vehicle will increase. Why? You're going to need it. It's going to break more often. And also we know that the older the vehicle gets, the more fuel it uses, the consumption will go up. And there's a whole host of reasons why. If the running costs of any equipment is now becoming beyond what we budgeted for, clearly it would mean that we now have to replace that particular asset. Also, it's possible that the asset has become obsolete. Again, a classic example we can use here is your laptop. A laptop generally has a life of 3 years. And we know now with technological advancements how quickly it's changing, and you now realize that this particular laptop has become obsolete. Okay, so those are reasons why we would be disposing of an asset. Okay. An asset can be sold for cash or on credit. The question says, name 2 other ways in which an asset can be disposed of. Right. So we said, and again, you should now be, the responses should come automatically to you because we've discussed it at length. Right. It says here, other than cash and credit, how else can we dispose of an asset? Here we go. 1, it can be donated, right? So, let's just change that typing error there to donated, right? In other words, like the example that we had where the asset was donated to the local children's home, that's one way of disposing of the asset. Another one, drawings. That means the owner can take it for personal use. Obviously, remember the double entry, debit drawings, credit asset disposal. What was the story with the donations? Debit donations, credit asset disposal. Okay, another one, a trade-in. Yes, we trade in the asset on a new asset. In this case here, you will debit creditors control and credit asset disposal. Why are we debiting creditors control? Again, let me illustrate so it becomes very, very clear to you. Here's your creditors control. Here's the new asset that you've purchased, 200,000 Rand. Debit the asset, credit your creditors control. Now, if you are trading in a particular asset, say for 50,000 Rand, clearly you can see By you debiting creditors' control, it means therefore that you are only owing the creditor an amount of 150,000 rand. As you can see very clearly, new asset 200,000, trade in 50,000. So my double entry will be a debit to creditors' control and a credit to asset disposal. So that deals with the trade in. Can you think of another way of which an asset can be disposed of? Okay, something that we've discussed already, and let's mention it. The asset is damaged, right? And it is written off. That means the insurance company have written off the asset and they've accepted that the vehicle is now written off. They owe us that money. So therefore, they haven't paid us as yet. What are we going to do? You're going to debit an account called insurance claim. Asset account will appear under trade and other receivables in my balance sheet. Debit the insurance claim because the insurance company have acknowledged that the liability, they haven't paid us as yet, so we will debit the insurance claim, credit asset disposal. So clearly, guys, you can see that for every entry with asset disposal, the disposal, we are crediting the asset disposal account and debiting the relevant account depending on how we disposed of a particular asset. Next question. Fixed assets can be depreciated using the fixed installment method. Name the other method of calculating depreciation. Aha! Again, we said two methods of depreciation. One is where the question mentions here is using the fixed installment method. We know the fixed installment method, another name for it is the straight line method, another name for it is cost price. In all the instances, we calculate depreciation on the cost price of the asset. However, the other method is the diminishing balance method. This means that this is what we call it, the diminished balance method. In other words, you're calculating your depreciation on the carrying value. Therefore, it tells you that it's a completely different method of depreciation, whereby the depreciation is calculated on the carrying value. And how do we get the carrying value? Very important. It's your cost price minus your accumulated depreciation, which will give you your carrying value. So in this case here, you will then depreciate the asset using its carrying value. The owner of Yenzo Retailers recently discovered that some of his drivers are using business vehicles for their personal use. Do you see anything wrong with this? Explain why. Is there anything wrong? Of course there's something wrong. Definitely there's something wrong. What's the problem? The vehicles may not be available for business use. Maintenance and repairs are being done by the business. The lifespan of the vehicle is shortened. The vehicles were bought for business use, not for personal use. Clearly, there is abuse of the assets of a business. Clearly, it brings us to ethical considerations, the integrity of the people that are working for our company. So, what have we seen in today's lesson? We've dealt with the asset disposal account. We've dealt with note number 3 in terms of its completion. We've also seen how it is important that note number 3 actually balances when you start from the top of the note working downwards and when you work from the bottom of the note working upwards. So guys, important. Make sure that you understand note number 3 in its entirety. One very important consideration on note number 3 is when you have your disposals, it will always be at carrying value. Okay, so guys, we've worked extremely hard on our favorite topic, asset disposal. Now you practice and ace it in the exams. Until the next time, be good, practice, an A for an accounting and an A for Ashraf. See you next time.